We'll take a look from the higher time frame. First of all, let's take a look at the price section on the daily chart. So the market sentiment on the daily chart is still bullish, but we are more cautious. Nothing much has changed because we mentioned that this is the resistance zone. And when we populate into this area, we are trading into the resistance zone, which we have highlighted in the gray area. And then you can see that now market has traded back below 130 figure. Which pose a risk on the downside. If you take a Fibonacci retracement from the low at 120.41, the retracement currently held at 23.6% retracement. And if the retracement continue, we see the next strong support at around 127.40, which is only the 38.2% retracement, which is still possible. So while we are trading the retracement on the daily chart, let's take a look on the hourly chart. On the hourly chart, the sentiment is bullish, but again, we are more on the cautious side. The other day, we drew a line of the accelerated up channel. And yesterday, if you have followed us closely, we mentioned that price has briefly broken out of the up channel, and we are not sure whether this is the true break of the up channel or not. But now we can see the pullback continue to hold below the up channel, and we can say that market has broken out the up channel convincingly. So as much as we are bullish on the, as seen on the price section on the hourly chart, because the series of high lows are still intact, we are more on the cautious side to trade the deceleration. So price is currently decelerating. The sharp up move from 125. So this is where the buying interest spike up. And then if you take the Fibonacci retracement from 125, currently it is holding at 38.2% retracement. So this is your 38.2% retracement. So the sentiment on the hourly chart is not bearish, because we are currently just decelerating the sharp up move. In other words, the acceleration channel that we have drawn in this blue line. So the 38.2% retracement sits at 129.30, around this level. And if you look at the previous price action, 129.20 or 129.30 is the previous breakout level after the first and the second tried, and this is the third time breaking out of 129.30. 29.30 is a strong resistance now turned support. Therefore, we do not rule out for a consolidation above 129.30 before the next move. Before I go into the 10 minutes chart, let me just sum up the price action that you have seen on the hourly chart. So the market sentiment remained bullish. We are currently trading off the deceleration of this sharp up move from 125 figures. And if you take a Fibonacci from 125, 38.2% sits at 129.30, which also overlaps with the previous resistance, now turned support level. So we would expect 129.30, which we have highlighted in this grey box, to find some form of support before the next move continues. Let's zoom in into the 10 seconds chart to take a better look at the price action. So the 10 minutes chart always gives us the basic trend. So on the 10 minutes chart, the sentiment is bearish. And if you have traded yesterday, this is the up move that we have traded. And then price continue to find resistance below 130.80 and broken the previous low now. And this is our valid second lower high. So this is your first and this is your second. Now we have a second lower high because the previous low is broken, and this is our valid second lower high. So sentiment is bearish and we have a down channel as drawn in the dotted line. Like we have mentioned, currently price is trading very near to the support at 29.30, which is here. We do not rule out for price to find support at this level before the next move. Again, if we take a Fibonacci retracement from 30.75, where price broke down earlier, which is at 30.75, the Fibonacci retracement of 50% from this sharp down move holds at 130 figure. So if there are continuous selling interest, we would expect the retracement to find strong resistance at 130 figure to continue the down move. But on the other hand, if price trades back above 130 figure, the sentiment will be more neutral and will be trading back into the range between 130.80 and 130 figure. So there is two possibilities as seen on the price section on the 10 minutes chart. So let's just sum up based on the 3 time frames. First, on the daily chart, price action is still up, but we are more cautious on the buy side because there is a strong resistance zone ahead of us, and you can see profit taking comes in, and we are decelerating the sharp up move now. And on the hourly chart, the price action is building upwards, but we are more cautious on the buy side because we have broken out of the up channel, of the steep up channel, which is simply the accelerated up channel for a deceleration. And on the 10 minutes chart, price action is currently building downwards, found resistance at 130.80 to form a second lower high, and we have a new down channel right now because the previous low was broken. And for any retracement upwards, the first resistance should be at 130, which is the 50% Fibonacci retracement, to continue the down move if there are selling interest in the market to continue the down channel. Let's take a look at the support and resistance levels. This is very important because how price action unfolds at this level will tell you clearly on the market supply and demand at that point of time. So first resistance is at 130 figure, 130.10. Like what we have mentioned, if you have taken a Fibonacci retracement from the sharp down move earlier this afternoon, from 130.75 to the current level, the 50% sits at 130 figure right here. So the overlapping 50% Fibonacci retracement with the previous support can be a form of resistance for now. That is your R1, and where is your R2? If there are a lot of selling interest in the market to hold down the bearish sentiment, we would expect R2 to be at 130.20.30. This is the recently traded level. If you have traded for the past TWC,